So we'll begin by clicking open. You'll see the flash screen for a moment, and then this is your basic working toolbar at the top right there. If we're going to open a new case, we would click on New, and that would give us our initial fields, which are two tabs that you find, one being common, which are elements that would be common to both parties. The first being how many years that you wanted to project out. If there were children, you would put in the children's names, ages, and then if you scroll over, we see the age that they start and end school with the tuition credit entered in here, and then who it would be claimed by. Before we leave this screen, at the bottom we see the eligible dependent. We choose which person would be claiming that and for how many years they would be entitled to claim it. Our next tab, Agreement, is strictly dealing with support, and you would put in however many years the support was going to continue, or leave it at 99 if it was indefinite until you were told differently. This would be the dollar figure in the spousal support area, and here is where you would put any indexing for the spousal support increase. Below we see a year amount and a comment area that allows you to make any adjustments. So if the support was going up or down for whatever reason, you would enter it there. If we look over to the side here, you'll see that there is also information that will show you while you're entering on the cells here. The information is going to pop up over here. So it's very interactive. If you've made a mistake, you're going to see it right away. If we scroll down, we're going to see that this is the area for the child support. Here you would put in how long the child support was going for up to the last child, and then how much the annual child support would be. Again, the increase is for the indexing, if there is any, and you have this area for adjustments, which would definitely come into play if you had more than one child, and you could then explain in the comment area which child was no longer financial responsibility. So those are the two tabs that are common to both parties. Then you'll see up here supporter, recipient, and a preview. So if we click on supporter, it does bring us up a whole new number of tabs. In our basic tab, you're going to enter the name of the individual, their age, their address. One of the important features here is you need to choose which province the clients live in order to have the proper tax calculations. And then at the bottom here, you have personal deductions, so personal deduction credits. If it says supporter education, this means the individual you've just entered here, so the supporter, if they were going to school, you would put a start and end year and give them tuition credits that they could claim here. The other personal deductions are found in your manual and can be found on CRA every year, and you would enter in there whatever they would be. Our next tab is the income tab, and we're just going to move this over so that we can see all of the areas that you have to enter in. Income, if it's income that's happening now, you would only enter an end year, and then you choose which type of income it was. You put in the dollar figure, and if there is an index that's attached to their employment or whatever income it might be, you could put it in there. This also, as you would note, if you have a defined benefit plan, this is where you would enter the annual figure. At the bottom of the screen you have CPP, and so you would choose which age the person was going to start their CPP and put in the percentage for what they would receive. If they have a defined contribution plan or a LIRA, you would click open this has employment with pension, And if we click that, it allows us to open up another bunch of fields. You can put in the employer name or an explanation if it's a transferred pension from another employer. If they're working now and the pension that they have is connected to their employment income, you would enter their full employment income there. The increase would be if there was any growth, which normally there would be. And then here would be where you would put the full value of the commuted pension or the lira. If they're making contributions, the contribution cell is for the employee or the supporter percentage, and the next one is what their employer matches. Then you've got the pension return, and you put in the retirement age only if the person is with a defined contribution plan, not if it's a lira. And then the age to start withdrawals would be for anyone who has the lira. Here's the return while it is in the lira, and then you can have a different return when you enter it into a LIF. And again, on the side here, you will see any of this information populating, so you'll know exactly what is happening. Our next tab is expenses, and this allows you to put in quite a few different expenses. You can give a comment as to what they are. Again, if the expense is already part of their budget, you would just put in the end year, and for example, lifestyle, you would not put an end year. You put in the dollar figure annually and an increase if there is indexing connected to it. Again, you can have something, for example, if they're paying something for the children, maybe there's lessons or something, you can have a start and an end year if there's a specific time frame, and the comments, etc. And again, you can see what you're entering right here on the cells beside you on the spreadsheet. Our next tab is savings, and allows us to enter a number of savings that the clients may have. If it's cash savings of all descriptions that are just cash, not gross, so interest bearing, you'd put in the dollar figure that they have at this time and whatever the respective rate of return is. The next segment is for RSPs, and you would put in what the RSP value was. If you are aware, or if you need to, you can put in the RSP room, so the room that they have still to contribute. You can put in the expected return in the next cell. You give the age that it will turn into a RIF, and then the return that would be on the RIF. And if we keep going down, we also see there's a section for tax-free savings. Same sort of thing. You put in the value today, you put in the room that they have still eligible to contribute, and the expected return on that TFSA. In the debt tab, we have, very similar to our previous ones, if again they have a debt already going, you just have to put the payout year, and that's really only needed if they're going to pay a lump sum or something special. Otherwise, you would just put in the description, how much the full debt is, what the interest rate is on it, and then the payment that they're making on that particular debt. And if it's a new debt that they're going to start in the future, you can start with the start date and carry on. Our next tab is real estate. And if we push this over, we can see that we have quite a few cells available. If you have an existing property, you would not put in a purchase year, and you would put in a sell year whenever they plan to sell, if they plan to sell. Here would be the market value today, or on date of separation, a mortgage value if they have a mortgage, what the monthly payment is, the interest rate that they are having to pay on that mortgage, and this annual increase is the increase in the value of the property. If there is a second property and there's going to be a capital gains, you would check off this box, and you can enter in the unrealized capital gain right here, so it gets dealt with from a tax perspective. Our next tab is investments, and we have the same sort of idea as we did with real estate. There's a purchase year and a sell year. It would only pertain to going forward type of things with each of those. You put in the description of what that investment is, what the market value is, the expected annual increase or return, and click on this for capital gains to be taxed annually. Oops. If we look at the base cash flow, it's going to show us the results, and because we haven't entered anything, we don't see those results at this point in time, but it does give us income, CPP income, old age security, the clawback if it pertains, a minimum withdrawal from registered money, any interest or dividend income, any net cash from an investment being sold, any net cash from real estate being sold, any loans that you put in place, the taxes, their expenses, the mortgage and any loan payments, and child spousal support expenses, and a net cash flow. And over here we would see a graph pop up, and in our next presentation part we'll see that. And then we have an adjusted cash flow, which has another entry screen, so it allows us to make some changes. It allows us, if we scroll all the way over, in this unallocated column, we would see if there was a negative or a positive cash flow, and it would allow us to go in here and adjust that. Or if they're making RSP contributions, TFSA contributions, or adding some more into their savings, you could use any of these, and then you can pick whichever years from 1 through whatever, and it can either cover a deficit, you can add a percentage of any surplus cash, or it can absorb extra money. If it were for RSP contributions, it's do you want to maximize? Do you want to add a percentage of surplus income? Do you want a fixed amount or an increasing amount? And if you don't like what you've entered, you can hit clear and everything would go back to normal. And our last tab is net worth, which again, once we've entered everything, it's going to show us what the value of any defined contribution plan is, any LIRA, any LIF, the RSP value, the RIF value, the TFSA value, and the savings. If there's any value left in investments or real estate, if there's a mortgage still running, if there are loans there, again, that accumulated shortfall, and your net worth. And on the side here, we could see the graph of what we've done. Once you're ready to print, you would go, or if you even wanted to just do a print preview, either way, you would click on print, and then this would provide you a snapshot of what you're going to see. And so you can do that on every page to see where you're at and whether you want to print that page or not. The save and save as buttons up here, obviously you do save as if you were going to save it and name it, and pretty simply you just give it a name and that would be the end of it. And then once you've done that, you could hit save as you go along, and it's going to retain all of your information. And really, that's all there is to all of the elements of the Perspectives software.